Hi everyone, it's Evan from the Trade Risk on Wednesday, July 8th here with a market recap video. We are first going to spend some time analyzing the current market environment. We're going to look at some other markets, some leading and lagging sectors, and then finally some trade ideas for the remainder of the week. Now before we get started, I want to remind everyone that I am hosting a free trading webinar. It's coming up Wednesday, July 22nd. That's in 2 weeks from today, 7:30 p.m. Eastern, and it's free. We're going to talk about how I analyze price action. We're going to talk about how I find my trade setups, how I position size, how I manage risk. Overall, it's basically just education and general insight into my day-to-day process. So the traderisk.com/webinar, you can sign up here. It's free. Even if you can't make this date, I will email you the recording of the webinar. So if you can't make it, you can still sign up anyway if you want to get access to it. Just sign up here, the traderisk.com/webinar. Should be a lot of fun. It's my first after hours webinar, so I think I can provide some good value, answer a lot of questions, and have a good time. So with that said, let's jump into some analysis, and we'll start with the SPY here today. And it was a pretty poor session, down 1.7% on the day, and we basically, it was almost the exact inverse of yesterday's candle. Yesterday we had a hell of a range all the way from 204 closing all the way up to 208, and then we basically just reversed everything today and closed right into this 204.50 level. So this is going to be an important level. Certainly the bulls couldn't hold anything together off of yesterday's bounce off these lows. You know, at the beginning of the day I was telling subscribers, and you know, we really want to see at least 50% of yesterday's action hold. I mean, if there's going to be some real commitment and constructive action here, you'd like to see this 205.50 to 206 level hold, and of course that didn't happen today. So we closed on the lows, and this downtrend that we've been in now, which, you know, shouldn't be that much of a surprise that we've been in the short-term downtrend now for quite some time, and I think it really kind of solidified on this bar, this big gap down here on Monday the 29th. That was last Monday. And then, you know, we basically proceeded to kind of bear flag our way higher, and then of course all the volatility that we're seeing this week. So of course there's a lot of headline risk and news and all of that fun stuff, but the bottom line is the technicals have been showing we've been in this downtrend now for a little bit of time. So depending on your time frame, this may worry you, this may not worry you. If you look at a weekly chart here, you can see we are starting to roll over. Fast moving averages are curling over. I mean, we haven't really corrected too much just yet, but again, like I say, we need to start somewhere. If there's going to be a 10% correction, it's got to start with a 2 or 3 or 4%. So I think 204.50, exactly where we are right now, this is going to be an important level. You can see that it held as support here throughout February through April. We basically grinded, and bulls stepped in and bought this market up right around this 204.50 level. So that's what we are back to right now, and that's why we're seeing such volatility here, is because the price does have memory at this level. If we do break down and see more continuation, 199 should be a pretty pretty good magnet there that price would want to retest as well, because for the same reasons, we did find support there for several months back at the end of 2014 to the beginning of 2015. So that's what I would expect to see if we see more breakdown. Last comments I'll say is we are a bit stretched right here. You know, we have been sliding lower now, with the exception of basically yesterday was really the only kind of reprieve relief rally we had. Even though we had a nice green body here on Monday, it was still coming in as a gap down. So we really haven't seen any kind of real spring multi-day bounce higher that has been very constructive. So a little stretched. I wouldn't want to short anything here. I don't love the long side either, but I do have a little bit of exposure. I actually bought one name today, and I'll discuss that later on in the video. So I'm keeping things very light. I think for my style, that's what fits. Let's get into some other indices. The IWM, I mean, similar comments apply. It is holding up better relative, but if we're looking at a weekly chart, you can see even these fast moving averages are going to start to curl over. 120.50, that's a pretty important level. That's also the highs of this range range that we were in for an entire year throughout 2014. So if we're coming back down to retest this breakout that we saw in February, you definitely want that to hold for the longer term bull case. So the 120.50 area on the IWM is an important one. Then finally, if we look at the Qs here, first at a daily chart, you can see we're heading back down into some important levels again. 105 on the downside. Look at a weekly chart starting to roll over. Not a ton of damage just yet, but of course 105, another significant level. So all of these are looking pretty similar here, and they're all short-term, bearish, but we'll have to see if that continues to build, and if we do see a more substantial correction. I've kind of outlined some of those bigger levels that you want to have on watch. And again, reiterate for me, staying pretty light in my exposure, I think, is the best way to play it. Now let's look at some other markets. TLT has gotten a nice bid recently. It is back above this 119 level, gapped up yesterday. It's holding that today. Looks good. Maybe we put in some short-term bottom here for TLT. It needs to kind of get going on a weekly chart. Still in a little bit of a downtrend, obviously, since February, or arguably since April. So short-term, got some momentum. Let's see if it can continue. USO got clobbered again. We had a nice trade in this on the short side. We took some short last week, and we recovered into into yesterday actually, but USO continues to look troubled. If you look at the weekly chart, I think this really shows the picture here. We got nice and tight in this for about 6 or 7, almost 8 weeks, and then we started to just basically roll over. You could see it at the end of last week, which was our short signal here, and now we're seeing follow through to the downside, kind of a breakaway gap here. I wouldn't be surprised to see the lows retested, or just hang out here at the lower end of this range, at least tag 1650, or just go sideways here and kind of a mess for some time. USO, again, still a damaged chart. Longer term, I think we've been talking about this for a while now, so shouldn't be that much of a surprise there. UNG starting to look pretty bad, especially after today, basically engulfing yesterday's action, closed almost on the lows, and very close to these lows here back from May. So UNG, similar comments, looks like it's in trouble here, still sort of a mess, and not much that I'm seeing at this time just yet. Gold got a little bit of a pop today, but still this one's pretty messy. Same thing for silver. Silver actually broke all of these lows here yesterday, and then it basically just went sideways today. Didn't do a whole lot. So this is potentially a pretty nice interesting breakdown here on the weekly chart. You can see what's going on here. Looks like a pretty good sell signal to me on the longer term chart, but not something that I'm very interested in one way or the other. Now let's talk about some sectors here. Let's talk about the leading sectors, and I know it's hard. There's not many leading sectors right now, but let's just talk about the relative strength sectors. And for a while, we've been talking about the biotechs. We've been talking about healthcare, and that's sort of changed here in the recent, just in the past week or so. Utilities now are catching a bid. It's something to keep notice of. Of course, they've been beaten up recently for the past several months, but I wouldn't ignore this recent strength that you saw here in the XLU. And again, this is a product of rates going lower. You saw the TLT move, so all of these sectors kind of move hand in hand. But XLU is something to keep on watch. IYR, again, this one you want to keep on watch too. Rate sensitive sector. This has been seeing a little bit of rotation here. I've been seeing some of these names perk up on my scans, so it's something to keep on watch. And then finally, XLP, actually the staples, have this huge candle yesterday to the upside here, and of course it was pretty quiet today, gave some of it back, but basically back in this range. Still messy, but you did see a lot of those names kind of perking up yesterday, and I think that's something of interest. Now on the downside, the material names are just getting hammered here. Horrible session today. This one just looks like a mess. XLB, energy again with crude now getting hit pretty hard again. Back to the lower end of this range. Maybe we'll pierce it. Maybe we'll run some stops. Perhaps it's a good buy point. I'm not sure, but XLE right now is underperforming as of the past several weeks, and even technology sector now starting to roll over. It looks pretty poor. So that's kind of the high level update of what's working, which isn't much, and then what's not working. So with that, let's get into some individual names. Apple. This one's finally starting to see some rollover action today, down 2.5%. This pattern, we've talked about this pattern now. The more times you test it, the more likely it is to break. I tried getting short it somewhere in here, but it was a little too soon. And we talked about this retest level right here, and that retest certainly was tricky to get short this if you weren't just holding on from earlier, but failed to basically reclaim that trend line, rolled back over. Apple looks technically in trouble here. I know earnings are coming up, but that's not a name I would want to own right now. Google is just going sideways, not too much to say about it. Pretty clearly defined range here, so looks interesting. Again, earnings will be coming up. Netflix, this one's still holding pretty high and tight overall. Certainly saw some selling pressure off the $700 level, but it really hasn't given up too much ground just yet. Perhaps more sideways, perhaps an explosive move is happening. Who knows right now, but for now, Netflix isn't giving you a whole lot, but it could be setting up for a nice multi-day move here. Amazon continues to trade more or less in this rising channel here. You wouldn't want to see it go too much lower, break this channel. It could be into some trouble here, potentially longer term target, fill this gap if this does start to resolve to the downside. But for now, Amazon is trying to hold in there. It's basically doing the same thing it's been doing for the past few months, so keep an eye out for more of a change of character there. Facebook, this one's still holding up well. I mean, it had this pretty explosive move here at the beginning, mid of June, and it's been consolidating here now. It's caught up now with the 20 exponential moving average. It's at this prior level of resistance, 85.50. So this is a short-term level the bulls want to try and defend in Facebook for sure, and you know, that would make me much more interested in it if I do see it hold this level over the next few days and then eventually make another run for $88 or so. I'd probably be an interested buyer, but for now I want to see how this resolves here next to support. Twitter was looking good earlier in the day, and then it gave it right back up. We had this potential double bottom here, but again, when you have fast moving averages racing downward, you have a lot of damage prior to prior to this little double bottom. It's tough. You got to be very suspect of those patterns, and definitely want to see confirmation. So for me, I wouldn't be interested here until it's back above 36.25. I need to see it actually take out some resistance and show some strength, and then I would get interested in Twitter. I like the company, but cannot own the stock right here. Alibaba, this one's making fresh new 52-week lows. Nothing that's interests me on the long side. Again, if you look at a weekly chart, you can see here we broke below a pretty important level, $81. This had held as support now for March, April, May, grinded on that level, got a little bit of a bounce off of it, and then just basically continued to wash over since that level. So I'd want to see at least 81 reclaimed before I even start to think about any long setups. Right now, the moving averages, fast ones, are still racing lower. It's arguably overextended lower, so maybe it's worth a bounce, but this one doesn't interest me too much one way or the other. GoPro, this one been pulling back ever since it snapped this rising trend line that it was in since mid-March. Basically waiting to see how it resolves. This pullback's healthy in my opinion. Let's see if it can hold this $50 level. That'd be like a nice 25% retrace of this whole move. That would be some nice bullish action. I would look for some long setups after that, but I need to see it hold first before I get interested. So let's look at some setups on the long side. First is JACK, Jack in the Box. This one held up not too bad today. It's been consolidating relatively tight here. I like it above this $89. Take a look at a weekly chart. You can see what this looks like. It's had a monster uptrend move for a while. It's been pulling back a little bit. Get some continuation to the upside there. I think JACK looks pretty interesting. Fit, this is the new recent IPO. We had a trade in this the other day actually on this up move here. Got stopped out, I believe, on this candle right here. So it's been consolidating nicely. Let's see if this one can get back above $43. I think that one would be interesting. It doesn't have a lot of price history prior to this, but you know, above $43 is effectively new highs for this name. It's very volatile, so just keep an eye on your position sizing if you're going to take this trade. I'm watching it though back above $43. Get a close above there. I think that one's interesting. Again, ALK. Zoom out here, so I don't have a trend line draw on this one, but ALK on the weekly chart, you can see what I'm looking at here. Had a nice move from the mid-October of last year. It's been consolidating nicely, basically all of 2015 now, and it looks like basically getting back above the 68.50 or so level, I think would set this one back in motion. So keep ALK on watch. And then finally, CLGX. This is one I got long today actually, and I cheated a little bit because it's not a very clear, clean breakout, but given how well it held up today, I'm willing to try and get into this one a little bit early. I don't have much long exposure at all, and if I do want long exposure, I'm going to go to names that held up really well today. It looks like this one, if we get any type of bounce tomorrow, it looks like this one could be a nice springboard to the upside here. It's holding strong, couldn't take out resistance today, but you know, with markets down nearly 2%, it's tough to find names that are going to break resistance. So I like this name. Basically above today's high. I want to see this get going. Of course, didn't really get the full breakout that I wanted, but I'm willing to jump in a little early, just given the nice technical setup there on CLGX. And now a couple of short setups. BC. There's probably a lot of short setups out there right now. I'm not interested in the short side that much, so I haven't spent a lot of time digging through short setups, but these are a few names that I see that aren't yet overextended and could potentially break through support and give you a substantial leg down. So $50 or so BC, you can see the clear line of support that's been holding. Certainly not ready yet. Actually, quite frankly, it held up well today, but if the market does continue to correct, I think this one would be an actionable trade below this $50 level. Let's see, what else do I have? X-Ray is another one. This one, of course, has been holding up well. This wasn't a strong sector. Again, hasn't broken down yet. And if, you know, who knows if it actually will, but this is a relatively tight actionable pattern. If it does start to break below, call it, you know, $50.50, $51, depends on how tight you want to have it. This one could be interesting for a short candidate. And that is actually all I have. I had one more name, but I can't remember what it was. So that's it. That's all I have for today. Again, reminder, if you are interested in the webinar coming up, thetraderisk.com/webinar, sign up. Should be fun. I'll email you the recorded session, and that is it. So thanks for watching, and I will catch you next time.